Good day, family. Welcome to this new video. It is your boy once again, Mr. Paula SA. You know, it's the standard procedure what we do every week, the market breakdown. So this week's market breakdown will be a bit late because I couldn't have time. I didn't have time to actually analyze on time and all. I was too busy, but I hope the setups that I'm going to share with you, they're going to help you throughout the rest of the week as you focused. And I was focusing on to putting more new things onto my methodology and making it much more profitable. And I was able to see the flaws of my strategy and see where I can edit and I can add things that can actually be helpful to me and to you all, as I'm the one sharing setups to you and I'm also the one mentoring you guys and coaching you. So you'll be able to see a change on my setups. You'll be able to see a change as I analyze the market, and you'll be able to, and you will hear different new words and abbreviations and all. So I'll be able to make another video whereas I explain all abbreviations and explain everything step by step on what is what, and on the mentorship, because you'll be able to get more information on everything. And I was able to actually capitalize and extend and maximize my risk reward, making it higher and not aiming for lower stuff, because most of the time as retail traders I was a retail trader, I was just aiming for about, I was like going for a minimum of about 1:3, and at least maybe with sometimes getting 1:7 and all. But now I'm able to trade institutional trading now. I'm able to make more money, and I'm able to make more risk reward with about 1:20, 1:28, 1:60 and all. So I'm able to take trades like that, and which it is a good thing to me, and I'm very happy that I was able to do that. But I'm not losing the methodology that I was using. I'm just mixing everything and making it one thing, and not confusing the two actually, but trading it profitably. So don't forget, wherever you are guys, please share this YouTube channel with your friends and family. Please hit that subscribe button and please give this video a thumbs up. It is your boy, I love you very much guys. So we'll just jump into the chats right now. Okay guys, now we are on the screens and we're looking at USDJPY on the weekly time frame. So on the weekly time frame, as we're looking at USDJPY, we're starting from the higher time frame to the lower time frames. As you can see, the market actually, um, it's a bearish market. It's a bearish market. So the market is going down, but we can see something interesting over here, as it seems like the market, you can see it was rejecting on this place. So we're trying to figure out what's going on, and we see a break of structure over here, and now the market just want to go up here. So we are wondering what's going on, but we'll be able to see as you go onto the smaller time frames. And also over here we see a beautiful channel a bit, yeah, but let's just go to some smaller time frames and see what's going on over there. Okay guys, it's still on the sell. I hope you can see still on the sell. We had a double bottom over here, still on the sell. So you can see that the market has rejected this place. The market has rejected this place, and it's on its way onto somewhere over there. Let's just go onto H4 to see a better and a clearer version. Okay, guys, as you can see, the market over here, uh, it was just going down, and we see this as a rejection because on the higher time frame, what we have seen is that the market is on a bearish momentum. So all these buys are just rejections, are just corrections. So we see a very beautiful impulsive move and a correction over here. Then again, a break of structure to the downside. Then over here, we see that the market has gone up again and breaking a structure. So we can actually see many things over here. We see a break of structure as the momentum of the market is going down, and as the market broke the structure, it tells us that now the market wanna take a buy momentum. So this is a break of structure. Over here we see a break of structure, and after every break of structure we must look for an entry most of the time. So guys, this is a break of structure. This is a break of structure of a buy. We can expect the market to just come a bit down but still take the momentum of a buy. So this might be the ultimate uh, change of the momentum. Let's just go to our H1 time frame. So on our H1 time frame already I can see a beautiful channel over here. Okay, so over here I can see a beautiful channel. Don't forget, this is the break of structure. This is our line of break of structure, and I'm expecting the market to at least come a bit down. Then after coming a bit down, it will give us an entry. Then we can go up. But let's see where it can give us an entry, because when if the market can come down over here, we're looking at it coming to our 90% uh, whole point. So over here, maybe we can see something. Let's just go deeper and see what just happened over here. Okay, adjusting our channel, our trend line. So we can see that there was a break over here. There was a break of over here of the channel. Then the market was just a bit rejecting, and it seems like it wants to go up and reject and retest. So guys, let's see where we can, even if the market, if the market comes over here, where can we find our entry? So guys, over here I can see something beautiful. I can see a point of interest. I can see a point of interest, and possibly if there is no other point of interest over there on the top, the market will definitely come over here. I can see a point of interest over here with this candle. It's also an OB actually. No, yeah, it's just a point of interest. It's just a point of interest. It's a point of interest. So the market is just taking itself up. I might expect the market to come back over here and also break this structure to come onto this blue line, which is my 50% rule. Then taking a trade from there, from over to from here to firstly being it our first take profit, and our stop loss being just over here, but giving it a bit of space because the stop loss is 3.8 pips. Just at least give it a bit of a space, or it can, because this can possibly also uh, it can also possibly just go a bit down. So let's just put it over here onto this point of interest, because you can see this other point of interest over here. uh yeah, we can see a bit of a point of interest over there. So let's just put it over there. Then our trade being placed on the blue line, our take profit being over here, and our stop loss at least being over here, just risking 9 pips. So I just want to see how much we getting, probably very well. So I can see we getting about 150 pips on this trade with a 1:15 risk ratio. So let me just do this. Okay, oh, I made a mistake. It's 1:15. Okay, it's 1:15, guys. 1:15. So yeah, just yeah, it's a 1:15 risk ratio. As I was telling you when the video started, that I'm able to get a better risk ratio with this methodology. So possibly other things can come. We're looking at things, many things actually happening, because if you can see over here, we had a point of interest actually. We had a point of interest over here, and the market supported it. Oh, guys, wait a minute, wait a minute. Didn't I see this? Because I can see here over here, I should have taken a trade. I did not see this one coming, because as you can see, this methodology works a lot, guys. Uh, Imagine with a stop loss of 4.2. So possibly the market cannot it can like, because as you can see, this was the rejection. It just worked on our 50%, and we had a point of interest rejected on it, on the 50% mark, and it's already tackling itself up. So possibly the market can reach on this place, unless there might be something else, but I don't think it will reach again onto this place. So possibly the trade can just go a bit till here. So the break of structure has already worked. The break of structure has already worked. The market, I don't think it will come back to that place. Let's just delete all these and work with the small structure we have with this, the small one we have, and see how much actually we can make over here. It's 1:13 risk ratio. 1:13. So just as because we missed this trade, guys, because we missed this trade, I think we can catch another one. Yeah, we can definitely catch another one. We can definitely catch another one after the break of structure over here. Immediately after the break of structure, immediately after the break of structure over here, we can definitely catch another trade because the market will just trigger itself upwards, break, and come a bit down to give us another entry. Then it will shoot up, and it can also come and retest this white line. Yeah, it can also come and retest that white line. So guys, this is the analysis of USDJPY. Most of the time you find that your trade, you have a beautiful channel. You know, the methodology that I was using, as it was it alone, you find that we have a beautiful channel like this one, then it breaks, then our expectations is that the trade can come to this point, to our 90% rule. But you find that the trade just doesn't go to that place. It just turns on its way, then just goes up, and you wonder why. But those were the flaws of it. So I found a solution, which is this one. Now I know the reason why the market turns actually. So we have a beautiful turn over here. We're expecting the market after the break of structure over here, the market to trigger itself a bit down and at least retest this area, then go up again and break this break of structure, or maybe turn on this one. So let's just go to another one. AUDNZD. Let's just go to AUDNZD. Start from our weekly channel. Wow, this is a very choppy market effect. But we see the market is a bit going down, but it's still choppy. Still choppy. I can see a 10 over here, and it's a point of interest. It's just a big point. Or you know, it's also an OB, so we can just make it our weekly OB. We can just make it our weekly OB, which is our order breaker. This is our weekly OB. So it seems like the market is trying to trigger itself upwards to our weekly OB to give it an entry to go down. But right now we're still onto the bullish momentum. Right now we are on a bullish momentum because I can see over here there's something beautiful, which is this candle. It's giving us a point of interest. So let's just take it ourselves to a small time frame. Okay, we can see over here, this is our weekly OB. The market has been going down beautifully. It's been impulsing down with higher lows, lower lows, and yes, so it has been going down. And what I'm expecting over here now, I can see that the break, after this break actually, that's when we can actually have we can actually take a trade because this is a break of structure. After the market can break, if this the market can break this line, we can all say it's a break of structure. After the market breaking this line, we can say it's a break of structure. then the bullish or the buyers have the power now. After the break of this line, the buyers have power. So immediately after the break, we're going to expect a bit of a tickling down. Then we are going to be able to take our trades upwards, because I can see here we have something beautiful over here. Yeah, someone asked me and told me that why are you actually now with the new methodology working with candles? This methodology taught me a lot. Taught me the importance of many stuff. You see, guys, it taught me the importance of actually a lot of things on the market that I didn't even know. You see, the candles are very important, guys. They're very important. As you can see here, we have a point of interest. It's just also an OB. It's just also an OB, but it's also a point of interest. What's going on now? Okay, so you might also be expecting this to happen, but I don't think it will support this one. I don't think it will support this one, because let's just wait to see what the market does. Let's just wait to see what the market does. And by using our retail trading, we can see a beautiful channel over here, at least double touches over here. It's just the same as USDJPY actually. Not just good. This trend lines are not going to be supported. I can say they're not going to be supported. So let's just delete them, guys. Yeah, we can put in the one on the bottom just to see how many touches we have. And yeah, but I don't think they will be supported. So we had a touch here, and again another touch, and the market is going up. Oh, we have another break of structure, beautiful one over here. It's a break of structure. So we are on the bullish side, guys. We're on the bullish side. So we have a break of structure over here. I'm expecting the markets to actually hit this level, come back over here on this trend line, giving us another third touch, then going up to our what? To our weekly OB, So let's just see if when it comes down, uh, which trade can we take, because I can see something over here, which can also be it's an OB. So we're expecting the market to actually hit at least the 50% of the OB, on the 50% level of the OB. So in place of the OBs, I love to put my 50% Fibonacci's, because they they show me a better vision. So I'm expecting the market to actually come back over to this level, and we can take our trade over here to at least the beginning of it, gaining about 213 pips, with a stop loss of at least 6 pips. Yeah, it's 6 pips. So let's just take it a bit down. At least we can have about 10. Yeah, 10 pips. It's 1 is to 19. 1 is to 19 risk ratio. So we're still on our H4 time frame, guys. We're still on our H4 time frame. Surprisingly, we didn't even reach our 1 hour time frame. but already we are seeing something beautiful on the h4. So I'm expecting the trade to get up here, come back to this level, then trigger it. Okay, on our h1. Oh guys, okay. So I hope you can see how my strategy works, guys. Wait a minute. We were on h4. On h4, it wasn't clearly, but I was able to see this OB. But I was expecting the market to give me a clearer rejection. But as you go down to h1, the rejection, it was very clear. We had a break of structure, and obviously on h4 I expected the market to come down a bit. It came down, another break of beautiful structure, expecting the market to come to respect this OB, this big OB, and to reject on the 50% level. And luckily it came and rejected on the 50% level. So basically I missed the trade because I should have taken this trade from here, and the market has already triggered in into the trade. So basically I'm not expecting any drawdown. I'm not expecting any market to come down now because it has already supported on h1 time frame. It is already supported. So now, as the trade is in, I'm expecting at least this is a bigger break of structure. I'm expecting after this break of structure, the market to come a bit down. It will give us another entry. So do join the Telegram group because you'll be able to get updates. Then after that entry, we'll be able to enter another trade and having multiple trades. So we'll be actually scaling in. But I hope you can see the power of the methodology that I'm using right now. Let's just go to one index, at least US30, because on Nasdaq, guys, on Nasdaq, I'm already on a trade which is just it was a bit close to hitting my stop loss. It was just a few pips to hitting my stop loss because we were looking at this OB over here. We were looking at this OB. So yes, let's just go to our M15 and see it properly. So I took a trade over here after it rejecting on the 50%, went up again, then came down to this level, so just triggering itself again up. So I'm not sure what's actually happening, but I know even if a trade, I can lose a trade, I'm just risking 1% of my account. So I was analyzing US30, guys. On US30, like it's not necessary to go to the bigger time frames. So I see here over here we have our point of interest on USDT indices. So we have a point of interest and the market has triggered itself upwards. So I'm expecting the market to actually at least because I can see a point, a break of structure over here, a previous high over here, and another one over here. So I'm actually expecting the market to trigger to come back over here correctively and reject onto this line, onto our 50% rule, then us being able to take a trade from there, and our stop loss being about over here, which is about 50 pips, and our first take profit being this one. Then the rest will be able to to take our trade to break even, and also be able to just trail stop. We'll be able to trail stop our trade. We'll be able to trail stop our trade because there's no other higher high than this one. So if the market, if it can be a break of structure over here, the market breaks out and just comes a bit and retest, we'll be able to get another trade and go up with it. So technically, let's just see something over here. Okay, technically you can see that the market has broken the channel and it's just rejecting with these candles. So I'm just expecting the market to come back down and just go up again, guys. Let's just see on the M15. Maybe something happened, but actually nothing happened. Okay, nothing happened. So yeah, guys, as I was saying, I'm expecting the market to come back here and we can take our trade up there. We're gaining 1:7 over here on this trade. 1:7 with our first take profit only to 1:7. So guys, it is your boy once again, Mr. Paul SA, your mentor. Yes, sir. And I'm signing out, guys. I'm signing out. Please don't forget to give this video a thumbs up. Don't forget to like the subscribe button and also share it with your friends and family. Guys, I hope this will help you. Don't forget to join the Telegram group. All links will be below, and also watch other videos because they're also going to add something onto your knowledge. Yes, guys, it is your bro once again, Mr. Polish. I'm signing out. Yes, sir.